Should we buy or sell Gibraltar Industries? So first off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So in the other themes, I have a bit of a goofy theme that I call funny tickers. And Gibraltar, they do have an interesting ticker. It's ROC. They are in the metals business, 14% from the 52-week low, but still minus 47% away from the 52-week highs. Here is their website, Gibraltar1.com. So I am assuming someone had taken Gibraltar.com. Let's just... So these are the people who own Gibraltar.com. So what is this? Discover Gibraltar. Start here by taking a look at some of the most beautiful things that people like to see in Gibraltar. Eat and drink. Yeah, it seems to be some kind of information. Yeah, it seems to be a bit of a commercial page. Anyway, excellence in the making. Every day we change how people live, how we build, grow, and power our progress. Welcome to Gibraltar, a company of makers, thinkers, and doers on a mission to change lives with services and products that work as hard as the people who use them. So, edge tech, renewable energy, residential, and infrastructure. Yeah. So let's look at the charts like this. Weekly data points, big picture. So we see that there's a lot of history here with this stock. It went public here way back in 1993. Yeah, we've recently seen a pretty substantial pullback to a level that, potentially could be a horizontal-ish support level. If we go here to the daily data points, we can see that there is something afoot here. The issue for the bulls is that even though they are making some progress, they are contending with this blue 100-day moving average, which the bears have been able to use as a pretty good short level. Then again, the bulls have used it back here in July as a point to stage a pretty substantial breakout rally. That rally did fizzle out for sure, but if we measure, the gains from here to there, 16-ish%, it's a decent rally. And you could also make the case that this looks a bit rounding bottom-ish. So there is something constructive here with Gibraltar Industries. Looking here at, the other indicators, we are not like in high danger territory on the PPO or the RSI. Looking at the daily data points, we are emerging from a low level, and we are not yet in at any kind of high level that is like very attractive to the bears either. So interesting. So when it comes to Gibraltar Industries, I write 100 DMA resistance as the entry signal stop loss. On the long-term radar, though, I do write rounding bottom, so I do give this one to the bulls, but the caveat here is that the most recent signal is actually bearish. We do have that resistance level. Here is the seasonality. So to the right here, we do see that there is some bullishness into later September, but then into mid-October, the seasonality is weak. To the left, we do see that September is a strong month. We are still in September. October is very weak, but November is very strong. Over the last 10 years, September, October, November are the strongest months. That's bullish. The last 20 years, we do see that September is strong, October is a bit give back, but then November and December come with a lot of strength. So the seasonality here is more bullish than bearish. Given that we have this increasing strength here in the seasonality, especially long term, I give the bulls a 6 here on seasonality. This is definitively something that could embolden the buyers. Here is SACS with some fundamentals. A number 2 buy, B value, B growth, and C momentum. Industry rank, top 24%, building products, miscellaneous. A market cap, 1.33 billion US dollars if we go to insider activity. So we don't have any moves that are at least recent. We have to go back to May here, but that was a bunch of accumulation, so buying, which is bullish. When we look at the consensus estimates 4 analysts are covering the stock. Average price target is 53% above us. The highest is 88% above us. Lowest is 29% above us. So on the fundamentals, I give the bulls a 7 here. These are very good fundamentals. So let's look at the correlations. We have 40% with the S&P 500, 9% with the metals and mining ETF XME, a very low correlation, minus 33% with the 10-year yield, and we have minus 26% with natural gas. And when we go here to the daily data points, 62% with S&P 500, minus 6% with XME, minus 76% with the 10-year yield, and minus 47% with natural gas. These kinds of industrial stocks, they are very sensitive to energy prices. Okay, so it seems like the strongest correlation we do get here is actually with the S&P 500. I did look at the S&P 500 in another video, so I think I'm just going to look now at the XME. I don't think there's any point in really comparing these two given how low the correlation was. But here is the metals and mining ETF. We see that there's been some bounce, but it's noisy. We have resistance levels. We recently had a strong bounce looking at the daily data points. So the blue 100-day moving average has been resistance for some time. The last time we broke out above it, it was a fake breakout. So this is just a very noisy situation. It's hard to become bullish about this. And also given this recent bounce, you don't want to short it either. So it's one of those situations where it's best to wait and see until you get a more clean trading signal. There was a negative correlation with natural gas, so if the natural gas goes down, it usually is beneficial for Gibraltar. I mean, we are seeing some pullback here in natural gas from a very, very high level, that is. If we go here to the daily data points, yeah, the RSI level that we are pulling back from, it's been a level where multiple times, going back here to early 2021, it was a shortable level. So the pullback is not like a super shock. But we are seeing some bounce here from the blue 100-day moving average. If that functions as support and we do see some rebound in natural gas, then that will be detrimental to Gibraltar. Given that we did not find any very clean correlations here with Gibraltar, we did have this thing with the S&P 500. Though I did analyze the S&P 500 in another video, so you can just look at that one. I think that we will just look at a rock against the S&P 500 like this, SPY. So here they are. So you see that RSI has reached the mid zone here, which is historically a rather noisy territory. So there is quite a bit of noise here in the technicals. If you look here at the seasonality, we do see that the seasonality is bearish here for Gibraltar. It usually underperforms the S&P 500 into early October, and then it starts to outperform a bit. And due to the unexpected data when it came to the statistical correlations, I will only give -1 here on relative performance. We do end up with a 3.8 here in favor of the bulls. The issue is that we are at 100 daily moving average resistance. That is the most recent tradable signal, and that's a bearish signal. Given the data on seasonality and the fundamentals especially, there is reason to expect that the bulls might be able to break out above it. So the odds of that has increased, and if resistance were to be broken, that would close out some shorts, and then you could get a self-reinforcing feedback loop. So there is this. It's a bit of an interesting setup here for Gibraltar, but it's contingent on a breakout now because the signal is currently bearish. So we have some time left. Let's run through some of the stocks in the metals and mining ETF. We start here with New Core. NUE is the ticker. Yeah, so in this case, we see a strong rally. There's been, yeah, we have a bit of a breakout setup here. That's bullish. But I do prefer to get in before the breakout. I think that what was more, tradable here is this inverse head and shoulders pattern. If you were to get in around, that low end of the right shoulder, that would be a better trade. You can, of course, buy a breakout in development, but the issue is that your position literally start out, zero profit. So you will only benefit if it goes up, of course. While those who bought near that right shoulder, they do have a buffer. Let's look at the daily data points. I mean, this is very breakoutish. Yeah, I mean, RSI is not yet at like a dangerous level, except back here in, between May and early 2021, the current RSI level was dangerous. That's the issue here. It's, yeah. So basically, it is a level where in the past we have seen the bulls just lose faith. So here is Steel Dynamics, very obvious what they are into. Here again, we do have the breakout setup. That's interesting, but there's a but. If you thought you were to get a breakout here, you would have been disappointed. If you thought you would get it here, you would also be disappointed. If you thought you got it here, you would also be disappointed. If you thought you were to break out above these levels here, that was very disappointing. So it goes to show you that there's been multiple times here with Steel Dynamics where it looks like we are going to get a breakout. And when you talk about breakouts, you do like a TA measured move and you see like a big upside. But the issue with breakouts is that they are more difficult to pull off. They are lower frequency events. Rallying from a support level is higher frequency events, and if I were to choose between a low frequency event and a high frequency event, I would prefer, of course, to buy the high frequency event. In this case, yes, this looks like a breakout about to happen, but we have seen this in the past with Steel Dynamics. So in order for this to really become a breakout, the bulls need to really like commit, you could make the case that this looks like a very big inverse head and shoulders pattern. That is potentially bullish and could be like the catalyst that makes the breakout happen. RSI and PPO are not yet at the dangerous levels. Accumulation distribution is very bullish. So there is definitely some interesting action here with Steel Dynamics. But as I said, I'm not a huge fan of betting on some breakout. Then you have United States Steel Corporation. A very different chart from Steel Dynamics. Oh, this is just so noisy. Yeah, but on the daily data points, you have a clean signal, and I think you can see it yourself. You do have a resistance at the red 200-day moving average. So what you could do is to put on a pairs trade, where you short Steel Dynamics. No, you short United States Steel Corporation. So you short United States Steel Corporations, and you then potentially go long Steel Dynamics betting on a breakout. That's a potential way to play it. Next on the list is Uranium Energy Corporation. Here we do have, we did effectively sort of break out. We did close above some prior resistance levels. Looking at the daily data points. In that case, interestingly, we did not actually close out at a breakout. But you see that we are close to breaking out above some key levels. So the level here from back in June, big deal. And also this level here from, when is it? It seems like, yeah, it's late August. So we looked at Gibraltar Industries, conflicting messages, but interesting stuff. We also looked at some of the stocks in the XME ETF, Metals and Mining ETF. And there were some pretty interesting opportunities there. So whatever you do, of course, in the market going forward, you certainly want to have some entry signal and stop loss level in play. It's the number one thing that the market wizards recommend. You always use the stop loss, and you always have an entry signal. And if a trade moves in a direction that favors you, you should change the signal, the stop loss signal along. Okay. Because there's a very big difference between capturing a 10% gain versus closing out with just a 5% gain. The more you get, of course, the better it will be long term.